Price falls into this green line, wicks straight through it, and turns around like it hit a floor. No retest, it just goes. And that level wasn't drawn from a swing high or a round number. This tool built it out of RSI. And look how solid that green is. That's not a color choice, it's a score. Stick with me and I'll show you exactly what it's scoring. And at the end, I'll show you the one setting that turns this from 5 lines into a map of every level still in play. Open TradingView, hit Indicators, search RSI Core Levels Heatmap. Author is Big Beluga. It loads in 2 places, a panel under your chart and levels on price. Most support and resistance tools draw a line at every swing and leave it there forever. This one only draws a level when momentum actually turned, then grades how hard that turn was. 3 things on screen, that's all of it. Under the chart, RSI and a signal line. On the chart, levels with a number attached. In the corner, a table. The colored line is RSI, green at the bottom, red at the top. The orange one is a smoothed version. Now the part almost nobody checks. A level does not get drawn every time those two cross. It only counts if RSI crosses up through the orange line while it's still below 50. Below 50 means momentum is in the weak half, so it's waiting for momentum to turn up, while price is still in trouble. Same in reverse for the red levels. RSI rolling over while still above 50. Then it looks for somewhere to put the line, and this is the bit that caught me out. It doesn't draw it where the cross happened. It walks back up to 11 candles, finds the first red candle, and pins the support to its low. So the line often sits well behind the signal that made it, back where sellers were last in charge. Now the color, which is what I flagged at the start. Every level carries an RSI number, and how solid it looks comes straight off it. Built at 26, deep and solid. Built at 45, washed out. You're not reading the line, you're reading how loud it is. And when price closes through a level, it doesn't disappear. It goes gray, goes dashed, and stays put. The tool stops tracking it, but leaves you the wreckage, and that turns out to be useful. Then the table. Nearest support, nearest resistance, and how far away each one is in points and percent. That's your how much room have I got check before you touch anything. Most of this panel is colors. One number is worth touching, and one thing worth knowing isn't in there. The number is signal line length on 14. It sets how smooth the orange line is, and that's what RSI has to cross. Raise it, and they cross far less often, so you get fewer levels that each formed on a bigger turn. Lower it, and the chart fills with levels that mean very little. Now the part that isn't in the panel. Those color intensities are pinned to fixed RSI values in the code, and none of it shifts when you change your settings or your market. Which means the color is comparable everywhere. A solid green level on gold means the same thing as a solid green on the NASDAQ, on any time frame, on anyone's chart. It's already a fixed scale. So 4 things have to be true before a level appears, and they explain every level you expected and never got. RSI crosses its signal line, on the correct side of 50. There's an opposite colored candle in the last 11 bars to anchor to, and it isn't already inside a level you've got because it refuses to stack them. So what does this look like when you're actually in it? Quick thing before we put this into a real trade. What I've just shown you is really only one part of trading properly. The bigger shift is having a professional methodology behind it, knowing what you're looking for, when you're looking for it, and having the rules defined before the trade ever appears. That's how our members trade. They use tested strategies like the one I've just shown you. And because the process is defined, they can automate the execution too. So the setup still gets taken whether they're watching or not. And they get one-on-one guidance from Ross, an ex-City of London trader.
You know, I've been in this space since 2016, and this is by far the best retail environment that I've seen in all of FX trading. I really mean that.
If you want to see how it all works, there's a short video on the site that walks you through a real trading week from start to finish. First link in the description. Right, back to the charts. So price has been selling off, and down in the panel, RSI is buried. You can see green squares printing under the candles. That's the tool flagging oversold. Then RSI turns and crosses up through the orange line, still well under 50. That's the trigger. And a solid green level draws in, anchored back at that red candle's low. Solid, not faint, so momentum was genuinely stretched when it built. That's the one you care about. Now you don't buy the signal. The signal happened in the panel, the trade happens at the line. You wait for price to come back and test it. Price comes down, wicks under it, and closes back above. That's your entry, on that close. Stop goes just under the level, not under the whole leg down. And the reason matters. That level is one specific candle's low, so if price closes below it, the exact thing that built the level has already failed. Giving it room underneath a low that's been invalidated isn't patience, it's paying for hope. Target comes off the table, nearest resistance, and the distance column tells you what you're playing for before you're in. Here, the room above is comfortably more than double the distance down to your stop, so you're taking a 2-to-1 minimum. And that column is a filter, not just information. If it ever shows less room up to the resistance than you've got down to your stop, the trade isn't worth taking, however good the level looks. And this isn't a one-off shape. Go back through any week of gold or the NASDAQ on the 15-minute, and you'll see it again and again. Deep colored level, price walks away from it, price comes back, and the reaction happens right there. Once you've watched that 3 or 4 times, you stop reading these as lines on a chart and start reading them as the last place momentum genuinely changed hands, which is also what makes the faint ones useful. They're the ones quietly telling you not to bother. Now the other way, and it's the mirror image. Price rallies hard, red squares start printing above the candles, and in the panel, RSI rolls over and crosses down through the orange line while it's still above 50. A red level draws in, anchored back at the last green candle's high. And look how deep that red is. That's telling you RSI was properly overbought when it formed. So this isn't a level built on some half-hearted stall. Price comes back up into it, rejects, closes back below. That's your entry. Stop sits just above the level, above that anchor candle's high, for exactly the same reason as before. A close above it and the level story is finished. And the exit is where this one gets more interesting than just wait for the target. Your first target is the nearest support on the table, because that's where the tool expects the next reaction. And price reacting is the entire thing it's built to find. But there's a second exit running alongside it, and it's the one worth having. If your red level goes gray and dashed while you're still short, price has closed back up through it. That isn't your stop being hit, and your stop might be nowhere near. It's the reason you're in the trade quietly disappearing underneath you. So on a bearish one, you're watching 2 different things: the support row for where to take profit, and the color of your own level for when to leave, regardless of what the target says. Right, the setting I promised you at the start. This is the one that changes what you're looking at completely. Max active levels is on 5, and it looks like a tidiness setting. What it's actually doing is capping how many live levels it will keep. Go past 5 and the oldest ones get removed completely, not grayed out, removed, even though price never went near them and they were still perfectly valid. So on defaults, you're not looking at the levels on this chart. You're looking at the 5 most recent ones, push it to 20 or 25, and the older ones come back. And on most charts, a few of those are sitting exactly where price is about to trade. And here's a second layer on top of that. Once a level breaks, it stops being tracked, which means nothing stops a brand new level drawing in at almost the same price later. When you see a fresh colored level land on top of an old gray one, that's momentum having turned twice at the same price, weeks apart, for 2 completely unrelated reasons. Those are the ones I'd mark by hand and keep. Worth being straight with you about the limits though. It only draws a level once the candle has closed, so you're always finding out just after the fact, never during. And it marks where momentum turned before, not where it turns next. Everything on this chart is a reaction, a well-graded one, but a reaction. There's another one of these breakdowns waiting for you right now if you want to keep going. Stay disciplined, keep learning, and I'll see you in the next one.